Hello, welcome to this video. Welcome to this video. One of the risks of trading worth acknowledging, which I found some problems accepting it once I heard of it, was the issue of to do with slippage. Slippage. Have you ever heard of slippage? Slippage occurs when the market does not respect stop losses. Market does not respect stop losses. Naturally, in trading, we are told to uphold the risk management concept in order to be consistently profitable. But surprisingly, the risk management, whereby we set our stop losses and set our take profits, sometimes the market disrespects them, whereby you will find that you will end up incurring bigger losses than the ones you predefined. If you had predefined to lose like $10 in a trade, you will find that after the slippage, after this issue of slippage, you'll find that $13, maybe okay, let's say $13 have been deducted of your account. That is plus 3 of what you predefined losing. Let me put this into perspective with a very good illustration with both the bearish and the bullish version of the standard trading model. The bearish version was represented like this, right? And the bullish version of the standard trading model we represent it like this, where we said we set our sell order right here and set our stop loss above this place, depending on the broker spread. If you're using zero spread, then you just set a stop loss at that high, just above it. And on the bullish version, we said we set your buy order right there and your stop loss right above here. But what happens when slippage comes in? When slippage comes in, you realize that where you had set your stop loss, right? You'll find that the market will close that trade right above your stop loss in terms of a bearish market. If the market runs against your against your prediction, you'll find that the market, instead of reversing here, instead of closing your trade here, the market closes above your stop loss level. And on the bullish level, you'll find out that the market will close right below where you had set your stop loss. That is an aspect of slippage. So this right here, this in between your stop loss and where the market took you out is called a slippage. This is what we call slippage now. That is where slippage. It was difficult for me to accept it, but I also experienced it some days, some month back. I think 1 month ago. I was in a trade on NZD where I had predefined to lose $1 and some money, but I found out myself having to lose like more than $2. Yes, that is it. So we incur a bigger losses than the predefined ones. That's what we just said. And when does it occur usually? Slippage occurs usually when there is a release of news. And when news are released, it brings in a big volume of volatility. So the market tends to move quickly, right, up and down. So that is when exactly the slippage occurs. And it occurred to me, it was the release of, I believe it was CPI news. That's when I lost I now came to understand the aspect of slippage. Let me try to illustrate with this guy, with this gold. So slippage, as said on the bearish version, you say that you're supposed to set yourself with our bearish version of the model, which is just printed in this setup, which occurred on this one printed on December 18th of this month, right? This setup here, I broke down this setup on some video back. So there was a first break of structure. Then we're supposed to set our order right at this dotted line. You realize that, as said, you're supposed to set your stop loss right above this high, right above that high. Whereby, let's do it in terms of numbers. I see you can estimate this guy was around 2042 maybe, and we can estimate this guy your stop loss around about 2048. Let's say that. But slippage, when slippage occurs, you realize that you're taken out of the trade right above 2052. Yes, so you are supposed to lose this amount of pips, which usually converted in form of money in your account. But you realize a slippage occurs and you lose plus this one. So around this guy, maybe our entry was at 2042, and our stop loss was 2048. So 2048, you can say like this, right? Let's clear this one. You can say 2048, 2048, take away 2042, right? Take away 2042. You get 6 pips. That's around 60 pips, right? That is what I said. 2048 minus 2042. Is that the math which you are doing? Why did I go even to the calculator? So 2048 minus 2042, you realize that 6 so 6, so it's around 60 pips, right? This zone here, from so you are risking 60 pips on this trade, right? If the market reverses on us and the 50 pips hit this place, then we are out. But with the slippage, we realize that we are closed at around 2052. So we say 2052 minus 2048. That is 4. That is 40 pips, right? You realize that with the result of slippage, we lose 40 pips plus, making a total of 100. So you are 100 pips converted into shillings, into dollars. You realize that you lost 100 pips in that trade. Yeah, your stop loss was not respected. The market decided to close at another at an extra pips. Yep. So with 60 pips using lot size, when you are using a standard lot, you could be losing around $600, right? Yep, $600 on this 60 pips. With this 40 pips, that's around $400. $400. So in total, you lose $1,000. So your $1,000 will be deducted of your account, but originally you predefined to lose $600. Yeah, that is how slippage usually occurs. And you also realize that a slippage, said, usually occurs when news are released, when the market is just that volatile. And written just here, it is unavoidable. Once you are you are in the trade when the news are released, you're likely to be affected by slippage. You're not a mountain, you're not immovable. When your order is on and slippage occurs, then you're also going to experience that. That is an unavoidable risk of trading worth acknowledging. And I've written right here that it varies from broker to broker. Yeah, varies with brokers. I think with this issue of varying with a broker is that you find out that different brokers, time lag, delay in both order placement and order placement and exit. Forget about this guy. And exit and order exit. So you see, there's some brokers, when you place an order, you will be entered into a trade much quickly than others, right? That concept I had yesterday from some guy. I never knew that I knew of I just knew that orders are placed at the same time by all brokers, but you see, the broker connects us at retail traders with those platforms where with the MT4 maybe, yeah, and where those electronic charts are projected, and we have different brokers, and their systems vary. There are those ones whose systems are very quick, and there's also those ones whose systems lag or delay in about both order placement and order entry. And I remember the lady compared some broker with the best yani it doesn't delay when you place an order. Immediately you tap a sell button or a buy button, you'll be in within milliseconds. And some others a delay where you tap a sell button and it'll take a second, even a second before your order is your before you're in that trade. And the see what we all as traders admire is that when you just open an order, it just entered in very quickly. Yes. So I've said here varies with broker to broker. Yeah, time lag delay in both order placement and order entry. So imagine that the slippage is occurring in the market, right? and you are you're trading with a broker which is low, its technology is low, you know how much will that cost your account? Yes. See, when slippage takes a lot of time, and then it means you're gonna lose much money compared to the guys who are using brokers which don't take time to close entries. Yes, that is what I learned about slippage. So slippage for any newbie or even a trader who is already in the game, yeah, who had no clue of this thing called slippage. It's real. Yep. When that slippage occurred, I remember I went on Twitter, and the guys who I was following also were just in the same trades but different pairs. Of course, they were trading different pairs, but they were also crying that slippage had killed their accounts. Yep, it is a risk worth acknowledging. Thank you so much if you found something here. If you find this informative, though I've not delivered it in the best way possible, I am trying. Yes, yeah. And if you've not understood of anything, if you've not heard of anything, maybe you want a clarification, you can put a comment down below here, and I might clarify with a reply, with a text for you. Yes, that is it. If you're new to the channel, you can consider also subscribing as we grow together. That is the only return on investment that I wish I could get from you. Thank you so much, and have a good time. Bye.